Okay, so let's see what Mr. Market has for us today. Ah, that's true, Robert. That's true. Slovenia actually they become better and better and more sports, right? Um, Not much from the fundamental view. We had a speech from Carney yesterday, and a monetary policy from Australia was published. Not too many changes there, to be honest. The main event is going to be tomorrow, and we of course are talking about the FOMC economic projections, the statements, and the funds rate to be decided, and the press conference to be followed. New Zealandian GDP also very important event tomorrow. We can see the expectations are 0.8. That's what should most likely, until this event, until this time, bring some bullish environment to the New Zealandian, which it does on the couple of several few days. Okay. So we did set our directions yesterday, and there are not too many changes as for almost all of them. Some reached beautiful targets, and some are still on the way. So there are a few updates here from my side, and then I'll give you guys the freedom to ask whatever the pair you are at, and you are interested to hear my view, because as I said, not too many updates from not many changes from Mr. Market, therefore not many changes on our side. The first one that did what we wanted to see, that's the euro versus the franc, right? We have this push to new highs, and that was from yesterday. It was a pretty nice move. We have this new high now, and now it's time to pay attention to, because we are here in a special cycle and a double cycle combo. So we are getting closer and closer to the most critical zone, which is 116, 117 area. Once again, if we put these cycle levels, this is exactly what we can see. We have a 261.8 right here. Yeah, it's slightly around the 116. We have this one for duplication currently, and 161.8 here, right? In sorry, in other simple words, we are in the way to kind of, how to say that, kind of end of the bullish period, okay, at least for the short term. And this area would most likely be the areas where we will start and experiencing some beautiful, maybe even heavy retrace to the downside. Funny thing is that Switzerland disconnected themselves from the connection of the euro dollar long time ago, 2015, remember this one? January 2015, and then boom, we got this crash. And now, 2.5 years later, like almost nothing happened. Almost back to this critical 120 zone that they were fighting to protect so much. And this is why the closer we get there, the more and more pressure this area would bring, and the more and more bearish attendance we will start and experience. Now, we do have the levels. On the 4-hour chart, we do have a false break, one of them. Second one might be developing. So for us, we have two invalidations for the current long, right? That we have. And this one would be break below this low. That would be an invalidation. Two, if we start to get 1, 2, 3, 1, 2, and a breakout. In that case, it will be also a scenario that we start the move down. As long as this did not happen, none of these two, the bullish pressure we have from yesterday remains on, and there is a good chance we are going to cross the 116 to the upside, maybe even kind of test of 117 area. More than doable. Any questions about this one, guys? Jay saying all material was covered in the last couple days, right? Actually, yesterday we had a very important session. That's why I asked everyone on your free time, guys, make sure to watch yesterday's session. We talked there some very important things. Okay, it will be good to pay attention to that. Danielle, thank you very much. And oh wow, are you and yours safe after this Irma hurricane? It was pretty crazy in Florida and Caribbeans. I have a friend from the Caribbean Republic. Yes, exactly. And they ran away from the Dominican Republic. It's pretty crazy. Danielle, I'm happy you are with us here and welcome on board. And I hope everything will be on the best side for you and yours, and for everyone who got damaged this or other way by this crazy hurricane. This period of the year is always crazy, always crazy. Danilo asking, is this for investor style? Well, that's one option. That's option number one, to go with the invest here. Basically, this is a very good one. Why? Because the eurozone is running to its critical levels, where the central bank will have to do some actions later or sooner. Swiss already hinted in the past that they might finish this so negative rates for so long. So I believe we are reaching some monster zone here, which could be also traded by regular trading, of course, and could be also traded by the investor style investment. It's definitely an option. And by the way, we do have this report for the investment ideas. It will be shared, I believe so, today. Just waiting for my guys to final a few things, and I think today we're gonna have it. Okay, so hopefully it's there. Robert is asking, do I think that Swiss central bank will figure out something again to keep Swiss below the price? I am doubtful. They could. I'm doubtful. All this rally that we experience now is kind of hidden manipulation, right? But I don't think they will do again. I might be wrong, of course. Surprises did happen. Surprises will happen, but I don't think such negative rates to them is something that will last forever. And that's why I believe we are running out of this steam. And if you check out the weekly view, we are coming closer and closer to the top of this one monster candle, right? And the closer we get there, the more and more pressure we will start and see, and that's where it will start to be very interesting. The divergence developing here as well, daily as well. Monthly is a bit of suspicious, I would say, because according to monthly, and it's very ugly, not technical cycle, of course, but this, there is still zone to go to here. but as I said before, I'm very doubtful it's something that could happen right away. Or my point of view is more like such event, if at all. If at all. So that's why we should not rush, right, in a position. This is why we must have it. Let's remove these lines. That's why we must have it very, very clear, forming for us the false breaks, the convergences, switches. Then we can talk about these trades. Before that, irrelevant. Before that, we are bullish, and this is why we got it back on the table yet previous night, previous morning actually. We didn't trade it for 2 weeks because of this range, but now the way it went out of the range, it's again tradable. Let's see how far it can take us. By the way, there is a chance it's gonna take us through 117, yeah, like 118 or so. Definitely, that's why we are cool with that. And we are waiting for clearer setups to form. Okay. All right. Okay. So the next one I have on my list, guys, would be yeah, Lucas. You are waiting for your holiday, huh? So that's why you need this go down. Well, I hope for you it will. The next one I have on my list, guys, is where is that? Okay, the CAD pairs. Dollar CAD is now making this second leg. Remember what we spoke about yesterday, guys? 1, 2, 3. We got this 1, 2 on the 1 hour chart, range, and now second leg. Right? So it's doing the second leg right now, starting to show some kind of slowdown with the divergence. Right? We do have the divergence running here. I don't see any reason for action currently yet. And we have our bank zone, which is here. And as long as we are below this area, these rallies are welcome. And we have a trend line here. We have our bank zone here. We have our cycle duplication here. And the 161.8 is right there, not far from it. So hopefully and ideally we're gonna get one more, and then it will probably start to slow down, and bring us to the bearish days again. So get ready. Okay, I just want once again to repeat what I said yesterday, and I hope you watched already, guys. The importance of cycle reading. If we are looking to join the weekly cycle, that means that the double cycle correction must be on daily or 4-hour chart, not 15 minutes. Okay, not 15 minutes. I've been asked too many times about that, and it's very, very important to clarify that. We don't care of intraday if we don't have the correlations between the weekly, daily, and the 4-hour chart. If daily chart is in play and daily cycle is in play, then 1-hour chart is the lowest we can go and look for these corrections to. And corrections are always in two ways. One, double wave up. Second, range. In that case, we did have 1, 2, 3, and a range. False break, false break. Beautifully set, beautifully going, and now second leg, which also seems like making a triple or so. So if we can have this push to the upside, that should be a classical opportunities later on. No, it doesn't. We are going to blindly sell here. It means we are going to look for the opportunities to form there, like a trendline breakout and so on. False breaks, right? All the regular confirmations we have. Okay, guys, so very, very important. I want you to remember that, because I know this impatient feeling like, wow, the weekly is so good and it looks to sell, but wait, just wait. Okay, the correction has to be daily or 4-hour chart if we want to join the weekly direction. Very important. Okay, and if you try the daily cycle was running out of steam, and we got our false breaks on the 1-hour chart. It was mainly based to this candle, but it was there, and the convergence was not there to come and play. But what we did have on the 1-hour chart was 1, 2, 3, followed by double cycle correction, and that's where we got double cycle that turned to be a range, right? It started from here and turned to be a ranging pattern. 1, 2, 3, and this is exactly one of these invalidations we always talk about, right? Invalidations of the current long-term cells. So we need all that to provide one more, and then we are good to go. Make sense? So it's very, very important, guys, to remember these things. We all know how the human nature leads us to make some fast decisions, which are normally not really correct. Next one I have on my list is the New Zealandian Canadian, which is building its own bigger leg, and this is what we get now. We are around the 161.8. Okay, so two waves which also could turn to be a false break on the bottom, false break on the top, something like that. And if that happens, we can start looking for these cells. If the rally goes on, our next critical level would be here, which just would be next to the next important high we have. Okay, so we now finally have reached the double cycle correction on the 4-hour chart. We now finally start to develop this divergence, and we are next to the 161.8. This is the place to start paying attention for the possible sell zones to take place. Will it? We don't know. And we don't blindly sell, but we start definitely to look for possible setups with any of the systems we use, right? And this is where we have it. By the way, this current rally, okay, you can see the importance of the 19s. Right? You can see the importance of the 19th, and then we have 21st and 23rd, very critical days here. We have also the action zones from the Scorpio area, so we need to start to pay attention to this one. Okay, it might be running out of this bullish steam and bring back the bears. So that's about the New Zealand and Canadian. We have the CAD franc, which we accepted the first around 0.78 was reached. Our next short-term correction target could be even here, the gap, or slightly lower, but for long run, our view remains bullish, and we expect the continuation to the upside. Okay, so again, short term are still possible to even go lower, but for long term, our plan was and remains only looking for the buys. So on this one, actually, not too many changes. All right, let me just go over here, guys. Pound, no. All the pound pairs still the same. We talked about it yesterday. No changes. Oh, gold and silver. These two, okay, are slowing down. We can feel that. We can see that. By ideal, we should get some more. Okay, 1300 definitely is a possibility, but the slowdown is something we need to pay attention to, because from this area, if you have a false break and higher highs, it will be a great hint from Mr. Market that, okay, game is over. Time to look for possible buys coming in play again. Okay, so start to pay attention to that, guys. Our shorts did very well, but this already some kind of signs that we need to pay attention to. It could be also a triple cycle followed by double cycle correction and breakout. If that happens, game over for the shorts. Remember that. Okay, so that's a very important one here. Oil, no changes for us. Everything remains exactly the same. Indices, well, so far, as you can see by yourself, nothing to do, right? The only one that starts to be interesting again is the FTSE, of course, the UK one. We got this beautiful write down. This is our critical zone we need to pay attention to. Retest and a sell down definitely could be in play. We also have the DAX, which we start to pay attention to. We got a correction. If we go below the trend lines, bearish view could return. Same with the CAC from France. Okay, same from this one. And as per stocks, then I'm finished and you guys take the control. You tell me what you want to go over. As for stocks, Renault is the one that made a beautiful move for us in the last several days. As suggested yesterday, cash out your partial here already. It's a really good one. Deutsche Bank making its correction, which is also very good for us. Break up again and regaining the momentum, and we are back to longs. Our long view remains on as long as this low holds, because if this low does not hold, then there is not a bad chance we are going or much lower or another false break with convergence. We will just have to adjust our plans again. But so far, our plan was and remains bullish versus these lows, of course. We had two new add-ons there, which are on our list. One of them is this Groupon, which we are aiming for the longer around the top of the range here, next to the 38.2 of the double cycle of weekly. Right? We have this. 1, 2. We are to 38.2. This is the range we have. So every pullback we get, we expect the rally continue. And we have the Heinz, Kraft Heinz, this one, and we have two options here. Right, option number 1, this trendline breakout. Option number 2, lower low and convergence. So lower low here, higher highs with the convergence, and then we buy the retraces. Eyes on these two guys. And the final one on the list, currently on just a watch list, no specific plan. This is the Google triangle. Okay, and let's see which of the powers, bullish or bearish here, would take the control from this zone. Okay, so that's the quick update. Now it's your turn, guys. If you want me to go over anything specifically, please let me know. Nick already does. This is the Aussie versus the Kiwi. Aussie Kiwi has no change for us. 109, 108, 107 are acceptable corrections. That was the case. It remains the case. Break above the trend line, of course, will invalidate it, but as long as we don't have any other signs, these short-term corrections is still on play. Okay, Nick? Jake, Euro Kiwi. Euro Kiwi, we are bearish. As long as the highs are going lower, lows are going lower, and this range holds for us, our plan was and remains bearish. Okay, our first target of this short-term target of this cycle was reached. Our next cycle would be the daily triple. In other words, we can aim the 38.2 or 50 here. Okay. So basically no changes for us in that area. Our invalidation, however, is this range, this little range. If we break above that, it starts to be like a warning signs range. That means we will need to adjust our view. But currently, no changes. Euro dollar, well, that's the only one that, from my point of view, is maybe best to avoid. As explained yesterday, guys, I remain bearish as long as we are below here, and yet I am the first to admit this is not the best place, not the best scenario. The good view would be if we can have a false break here, regain it by lower lows, and then some rallies to be sold. That could be a good call here. But the way it behaves now, I cannot say I love it the most. For me, bearish while this top holds. However, once again, just want to be clear here. That's not one of my favorites. Not one of my favorites. William, Swiss yen, 4-hour double wave up to, let's see, Swiss yen, we enjoy the bullish ride and we remain bullish as long as this trend line holds. Okay, why? Because according to the bullish hidden divergence, the cycle read here is a bit tricky, as you can see. Cycle read could easily get us this double wave into double wave like that, or could go for full duplication, which is also more than possible to 120 or so. So for us, we remain bullish view as long as this as long as this trend line holds, and as long as we don't have lower lows. If we do, we're gonna switch that to the bearish view here. Okay, so for your question about the double waves, let's take a look here. 4-hour chart, double wave up to 61.8. Where is your 61.8? I'm not sure I understand. This is your double wave, but that's duplication. It's not 61.8. And this one is 161.8. We don't have. Oh, or you mean this, the retrace. Maybe you mean this one. That's probably what you mean. Yeah. Okay. Yeah, so basically what we have right now, tricky. The first one is irrelevant to candles rules, right? We don't have a valid correction. We don't have a valid correction here, right? So you have only one false break in play. So this move then should be triple cycle or special cycle, right? Triple or special. Let's go to the 15 to check if it's triple or special. No, it's not. You can see it's not. Well, you can say this, but this is like a forced count from my point of view. I would avoid it yet. If it's not obvious and we start to bend too many of the rules, I would avoid that. For me, as I said, current pressure is bullish. For longer run, I would remain bearish only by the break of this trend line. And for a short run, we need some clearer setups here. So even if we get like this now, it still can easily turn to be a range that will continue higher. I would avoid that. I think we have better options. Okay. Anything else, guys, you want on your list that you want me to cover? Just don't forget we have the FOMC tomorrow. So These kind of moves on the majority of the pairs are normal. It's not new, it's not for the first time, it's okay, especially after the amazing run we had on the last couple of weeks and some beautiful trends. Right, guys? So don't force. If nothing is happening, nothing we should trade, right? So only with very clear setups. When we have clear setups, we trade. We don't. Very, very simple. Okay. Well, euro yen also. Euro yen, my view did not change. We already are on the 134. I don't see currently nothing preventing that. There is a good chance we are going higher here. I explained it yesterday. No two false breaks, no triple cycle down yet. So why would we avoid it, right? Nothing happened yet. So no changes in my views here. Oh, Nick, where my hair gone? The barber went crazy. I went to some new barber here and oh, they went nuts. I said just be gentle and yeah, the Canadian barbers exactly. So now I look like a marine or any other kind of or KGB soldier, right? So yeah, it will grow. Don't worry. I'm still on the age where it grows. I'm still in the age where it grows. Thank you, Ruchi. Thank you. Jay. Yeah, dollar CAD invalidation. You were not listening before, huh? Is our bank zone here. Currently, this is what it is. Um, this rally is more than welcome, but I believe it should restart the sales soon. Let's see. Let's see. Too many things connected here with the oil, so let's see. Australian dollar, by the way, guys, we are in both there. Short-term directions are acceptable and tradable to the downside. We can more than easy get that happening. More than easy. We can on the same ease also start the rally towards the 082, 084. No changes on that view, of course. And that's all. Some of the setups are much clearer. Some of them are much uglier. And here comes the systematical trading because as per cycles we can clearly see they are waiting to regain the patterns, corrective and continuation patterns, majority of the pairs, and that's where the systematical trading is mainly in play. Last week we saw that it was mainly cycle swing trading, right? So classical pattern breakouts and boom, long-term targets, mainly on the pound pairs and some of the Pacifics. But this week we can see it's much more systematical. The moves are much more measured. The corrections are much more shorter terms, which provide us the opportunities for systematical trading and not just swing trading. Okay. Well, yes, Jay, do you see any invalidation for dollar CAD in terms of false breaks or triple cycle move up on 4-hour or daily? The answer is no. And as long as we don't have it on 4-hour or daily, that the direction does not change. What will change it for us, for example, would be if we get 1, 2, 3 on the 4-hour chart or a daily, and then we have 1, 2 breakout, and then most likely game is over. But as long as we don't have it, and we are not there yet, so why would it change? Right? We are not dealing with guesses here, right? We are dealing with facts. As for facts, nothing did change beside this short-term correction, which for some reason does make so many traders not comfortable zone. I don't know why. So many of you guys in the Telegram groups are busy with the cut pairs now, trying to guess how more it has up or how fast it will turn down. So why? Just let it go, just let it correct. For this, by the way, I still couldn't find the answer. Why most of traders, and I admit, including myself sometimes, are sucked into the less readable pairs. Those that don't have the clear setups. I don't know why. Sometimes it happens to me also. It's like, but it has to be right. It has to be right, right? I have to make it. I have to catch it. I couldn't find this reason why that happens, but it happens. It happens. So many traders, it's like a magnet. If we find a pair that we kind of love and we say, that's all, that's what I'm gonna trade. And for some reason, we trade mainly that. Randy, could you discuss a little more? You mean the bank zone? The bank protection zone, yeah. Um, yes, basically what happens is on such places where we get important level breakout, like in here, in that case, right? Important level breakout with a massive candle. Massive candle is measured not high-low, but open to close, right? The body, how massive the body is. And this one is pretty massive. And the next candle followed is inner candle. Let me zoom in a bit. This one. Okay, we got this breakout. And we got this candle. Followed by one inner candle, which is a doji, which is normally, on the more reliable cases, normally on the same color. That means on most of the times that the big money is setting orders there. If it's protections, or if it's pendings, or if it's insurances for options, and so on. So that's where normally such levels hint that big money is playing against or from these levels. And it's identified by breakout of significant level, followed by one big candle with inner candle most of the time on the same color, and then we have the full respect of this level because we know that big money is playing inside. Okay, and sorry guys, of course that could be on, that's not for the 1 hour and not for the 4-hour trading. That's daily and weekly. That's where the big money is involved. Okay, when that happens, many times you would see tons of money involved and protections. Last time it happened, by the way, was here. I'm just trying to show the important level here, guys. You see my chart here? Take a look. This inner candle, and that happened right here with the break of this zone. Okay, and this is what we got. Oops, where is that gun? This is what we got. We got this inner candle followed by inner like a doji, like a little candle here. And guys, can you hear me? You hear me well? It shows that for some reason the connection is not too good. Let me close some platforms. Okay, and that was our zone, and it was retested. See, inner candle here. It was retested. Bearish hidden divergence formed on that zone, and we got a continuation. And now this zone might be exactly the same. Will that or no? Of course, we will know as the cycle develops, right? But this is the idea of it. Okay, Randy? That's how it comes in play. Okay. All right, guys. So anything else? Anything else you have on your list of the pairs? Any pair you want me to go over, or we're good? Tomorrow is the FOMC, and don't be surprised if Mr. Market will continue this type of moves, at least until then. All right. So thank you very much for being here, guys. If you still did not have the chance to watch yesterday's recording, please do. There are several things that are very, very important to watch, some explanation, which I really want you to know, guys, just to clarify all this picture called the cycles. So thank you for being here, guys. I'll see you on the Telegram, and we meet tomorrow. Have a wonderful day, evening, and good night to the Pacific friends of ours. Ciao for now.